Preston, great to see you.
Hey, how are you guys doing?
Very well. Who do we have?
Huh?
Who do we have here?
Uncle Preston?
There you go.
How are
Uncle
you
Preston.
doing? How are you
Sorry?
doing? How are you doing?
I'm doing good, thank you.
Good, good. You liking this bull market?
Yeah, I didn't even realize we got to 100 something K until like
Well, who was last? Who
yesterday.
was last to know it was 100K in our house? Me.
Yeah, really? I didn't realize that.
Really, Daniel?
Yeah. Yeah.
But the thing is,
Mummy come up and told you, but I think you guys were already awake and had already seen
no, I didn't know.
it.
But
Perhaps,
the thing
yes.
is, like when she was like, "Oh yeah, it reached 100K," I was like, "Yeah, is that it?" Like, like we've been
So now
waiting
are
for
you,
this for so long.
is this 100K in euros that you're talking about, or is
Oh,
No,
this
the
yes, it
dollars,
100K
dollars,
is.
in
dollars.
dollars? Okay.
Even this side of the pond, Preston, everybody's tracking that dollar price. Although I did
Yeah.
put out a tweet the other day, where death is going along, banging on the doors. So I
Yeah.
had
Yeah.
dollars 100K Slade, euro 100K Slade, and knocking on the sterling door.
Yeah.
But Volker, BTC Volker, hat tip, he corrected me. He's like, dude, don't forget the Swiss. I'm like, oh shit, he's right. The Swiss
Oh,
franc.
yeah.
The Swiss
Yeah. Yeah.
franc is so the only two standing are the Swiss franc and the great British pound. They're the
Pound.
last
Yeah.
two doors.
Yeah. Yeah.
So
It's coming.
it's
It's coming quickly. It's coming
it's
quickly.
happening. And the
Yeah.
crazy thing is, if you're Swiss and British listening to this right now, if do you think we're going to 100K in those currencies? If so, buy Bitcoin. Like, what are you doing?
I thought we did hit 100K in
Not in
sterling.
Swiss franc or pounds.
Oh,
Euros we have.
Yeah.
oh, okay,
Yeah.
okay.
So yeah,
Yeah.
two more to fall. What did you want to ask, Preston?
What was your favorite Bitcoin conference this year and why?
Oh my, this year. I would have to go with Madeira. That one was just awesome. The location was unreal. It was a place I would never have gone. For people that don't know where Madeira is, it's off the coast. It's actually kind of off the coast of Africa, but it's Portugal. What would you say, Daniel? Is this like a province, or how would like
Yeah, so
what's the
probably
proper
yeah,
terminology?
yeah.
Yeah. But yeah, just gorgeous. The thing I like there is that it wasn't like outrageously priced either. Like if you went out to dinner or were like staying at a hotel, it like wasn't bad. And so that combined with just the conference was awesome. It was really well put together. Big fan of Andre who does it. Unfortunately, they're only doing this conference every 4 years on the halving years, I guess, is what I've heard. But
That's
yeah, that was
correct.
probably my favorite. Yeah. How about
Yeah,
you guys?
Madeira.
Well, yeah, Madeira and
Yeah.
Prague is close up. Prague is always a
Mm,
nice one, but Madeira was probably the best for kids because that's when there was actually a lot more kids our age.
mm-hmm. Mm-hmm.
And it
Yeah.
was kind of funny because every 5 minutes I kept bumping into people that I knew. So I was like, oh, hey. And I got in a conversation and my friends were trying to drag me away. They're like, this is like, you've been here for an hour. Can we please leave? It's just like, yeah.
There was
I
something
still haven't
special.
I still haven't gotten over the loss of when I was playing your sister at chess. I still haven't recovered from this.
Yeah, I didn't know which one won, but I was like trying to remember. I was like, oh yeah, didn't they play chess together?
Giant chess on
Yeah,
the
giant
lawn.
chess. Yeah.
I
Yeah.
don't think we even finished. I think
Oh,
we
maybe I
were
don't think so.
yeah, I don't,
I'm
but
not sure, but Caitlin won.
yeah, it was fun.
So yeah, for me, Madeira as well. There was something so special going on. It was pumping at the time. It was a new all-time high at the time.
Yeah,
Yeah, there
yeah.
were tears. There were tears.
And he rarely cries.
I couldn't. I lost it when Andre lost it, giving the closing talk. I was
Yeah,
because I
yeah.
was sitting next to my wife, who was sitting next to Andre's wife, and then Andre lost it on stage. Yeah, I'm croaking up just now thinking about it. But there's something so and a genuine thank you to yourself for coming across because and I don't want to blow smoke up your ass here, Uncle Preston, but I think a lot of Americans don't grasp the kind of the gravity of like the difference you've made in people's lives over here on this
Thanks,
side of the
man.
pond. That's
I got
you, that's Lynn, that's Jeff, that's Michael. A lot of people gave up their time to come over here. And it was yeah, awesome. Great
Thank
to
you,
see.
man. Oh, really appreciate it. I love traveling to Europe. There's it's so much different than the US, and the food's better. I kind of enjoy being able to go out. I really like the Bedford conference too this past year. Like that was really fun going out and just like hitting the pubs and I don't know. I like going to Europe.
All right. Well, we'll see you back here
Yeah.
next year, we hope.
Yeah. Oh yeah. I'm
Do you
sure.
have anything planned?
I haven't officially committed to Bedford, but I would kind of like to do that one again. I would like to go to the Prague conference. My son's on a robotics team, and last year, was it that or his Boy Scout camp or something? It was like one of the two that I couldn't go last year because of one of those two things. And yeah, I'm hoping that I have availability this year because I really want to go to that conference a lot.
Yeah, that's
So,
going to be June, mid-June. I've got the dates somewhere,
yeah,
but
yeah.
yeah.
Do we have any conferences planned?
We're going to go to Prague for sure, and we'll go to Helsinki. That's
Where's that?
in Finland in August. Yeah, it's going to be the first time to go to Finland
How
for
fun
us.
is this?
Go.
How fun is this?
It's the
You
best.
can tell me this.
No, I was talking to Luke is the other half of Knut's Bitcoin podcast show, the
Oh.
Bitcoin Infinity show. Luke and Knut do it together, but Luke's one of the organizing members, and yeah, we're going to go.
Nice. Are you speaking?
Yeah, I'll help host and MC and things like that. Whatever they need, whatever help they need. I'm there for
Let's
them.
go.
That's
Really need to go to Sweden next.
we've not been to Sweden either. Yeah. This year we went to Oslo, the Human Rights Foundation. That was good fun as well. Bulgaria was the first time for us.
I've heard
Poland.
Oslo is
Poland,
really
yeah.
impactful. Yeah, I heard it's
Yeah.
really nice. Yeah.
Yeah, it's
Oslo
very
was
good.
really pretty, and where we were staying was really pretty too.
Mhm.
You just and it was really pretty because we were like in a forest and then like a lake over there, and you just kept seeing like deers pass. It was
Yeah.
really nice. And that's when we went to the farm and I touched the cow for the very first time.
Yeah, we
Yeah.
did. Good. Bitcoin Bonden, I don't know if you follow him on Twitter, the Norwegian farmer that bought cows about
Oh,
2
yeah.
years ago, and he's
Okay.
doing a whole regenerative farming thing up there and
Oh.
Bitcoin for beef. Yeah, he's a great guy.
Wow. That sounds
Yeah.
awesome. That's the thing I love about this space. It's just people are approaching it from all different kind of lenses and angles and it's just kind of amazing how it fits into like everybody's kind of niche in somehow, some way, some capacity. It's just amazing.
Do you have any further questions, Lauren?
No, I do not. But
No? All right.
yeah, and thank you for having me and hopefully see you soon.
Yeah, I hope to see you
Nice.
soon as well.
Yeah, okay. Bye-bye. Have a good day.
Bye. See ya.
Right, Preston. So what I wanted to do was kind of a macro year in review. And
Oh,
I couldn't
okay.
think of anybody better than yourself
Yeah.
to just go through a couple of the talking points of what's happened in 2024. And obviously the biggest story at the moment is MicroStrategy. And
Yeah.
it kind of, well, he's pulling people in. It seems to be every other week now, there's a new announcement of a different corporation doing the same thing that Saylor's done.
Yeah.
So, I mean, I was going to make a list and go through it, but that can be a bit too structured and not come across as very natural. So,
Well, this is where I would start. So the price at the beginning of the year was 42,000. Based on that and where we're at today, we're at 108,000 right now. It's up 155% on the year for Bitcoin, which is, a pretty good year. And people that have maybe just arrived this year and maybe have a 75% gain or whatever when they first bought, you got to realize like 155%, pretty standard for Bitcoin. That's kind of a pretty standard year to be able to bang out 100 plus. So yeah, let me see what we had the year before, just to kind of put that in perspective. Okay, 2023 closed. Woo, that was brutal. And it went to just the number 16,000 at the end of the previous year. And it was up 150% the previous year. So that's 2 years in a row. We're at about 150%. From a macro standpoint, Daniel, I mean, we can talk about fixed income. You brought up the MicroStrategy and how we have others now kind of implementing that, primarily publicly traded miners, which I think is super fascinating and a topic that few have covered the implications of.
Mhm.
So let's
Let's
just,
go there.
yeah, let's go there. So
Why are Bitcoin miners who actually, earn Bitcoin through mining now going into the debt markets to raise capital to buy Bitcoin?
because they're mining the debt markets.
Nice
Right.
analogy. Love it. Okay.
Yeah. So if you can mine the debt markets and be way more, lucrative because they're so absurdly, and I don't know how long I've been beating this drum. For me, it feels like I've been beating this drum for almost a decade now of like how broke fixed income is. In
Right.
fact, I think you could pull up any interview I've ever done and you'll hear me talking about how broke fixed income is.
Okay. So
And
let's do this
finally,
justice. Let's do this
yeah,
justice. Beat
yeah,
the drum one last time.
yeah,
Fixed income, how it's broken, why it's
yeah.
broken.
So, so go back to 1981 here in the US and you had the 10-year treasury at like 16%. And you go into longer duration, the yields were higher, but let's just use the 10-year treasury because everybody, uses that as the risk-free rate and return for anything with medium-sized duration. So you're at 16%. And for 40 years, that just continued to get compressed, which means the prices on bonds went up for 40 years straight. And if you're in and I mean, there's volatility there, but the volatility stayed within a certain range. And for 40 years, the yields just kept getting compressed, compressed, compressed. In COVID, they got down to 50 basis points, which is 0.5%. So you go from 16% to 0.5% on the yield. And what if you're looking at the price of a 10-year treasury, the price is going up and to the right and just like hockey sticking itself straight up.
So
Okay.
you're paying more for less, basically.
Absolutely. And so if that's your benchmark for value and it's been priced at 0.5% and equities are priced as a premium above that because there's more risk in quote unquote more risk. Okay. A lot of people figuring out that today that's not the reality. And I can get into why that is. But so for 40 years straight, you have equities being bid to the moon. You have fixed income being bid to the moon, but primarily fixed income. So how did this happen? What was the mechanism behind this that caused all these yields to keep getting compressed? Well, when you print a bunch of money and you shove it into the hands of the banks and the select few, they get first bite at the apple of what they want to do with it. What you find is a lot of people that are super high net worth, they just want to be able to preserve it. They don't need to go out and hit a home run or hit a grand slam or crank it out of the ballpark. They're already rich. They can already do anything that they want. They just need to make sure that they don't lose that capacity. And so the way a lot of them continued to preserve that buying power was they just lock it into fixed income, especially if interest rates keep going down. And if you're locking it in the fixed income, you're bidding the price, which is causing the yields to keep going down. And this was the trade. This was the 40-year trade where everybody stuffed their buying power to preserve it and freeze it in time so that they could have it for, a rainy day someday. When the bank, so 2008, 2009 happened, okay, and what's the response of the U.S. and every other major G7 economy? Well, it was we need to get liquidity into the system. So what we're going to do is we're going to step into the fixed income market. We're going to buy these bonds. We're going to bid the prices even higher, compress the yields even lower, and provide liquidity into the market, and then it'll trickle on down to everybody else, right? But what happened is the people that were getting first bite at the apple of all this liquidity are saying, no, I think I'm going to go buy Park Place, or I'm going to go buy these other, really super high value. And Michael Saylor talks about this all the time of like people going and buying premier property in Miami or New York or wherever. This is what they're doing with these things. Okay. It's not trickling down. It's just getting the buying power is getting rammed and stuffed straight into like super desirable, valuable things, whether that's artwork or whatever. So they keep doing this QE thing, which is just compressing the yields lower and lower, and the bond price is going higher and higher. So what you have today, going back to the original point, you have people that have finally figured out what I feel like I've been screaming about for a decade, which is the fixed income market is manipulated. It's all this printing and all this central banking activity that was keeping everything liquid and everything else. Bid prices for 40 years straight. It was a relentless bull market. And as everybody knows, when you have a bull market that's relentless and goes on for eons, eventually there comes a time and a reason for why that's going to start to unwind itself. And what you're seeing is, and I literally just saw this stat posted like right before we did this interview. Listen to this stat. This is hilarious. Where is it at here? Okay. Bitcoin exposed convertible bonds, which comprise of 6% of the total convertible universe and have produced 20% of the year-to-date returns, right? So what are these companies doing? Well, they're going out and they're saying, well, fixed income is mispriced. I'm going to insert Bitcoin via convertibility into the common stock for the people that are buying this. That's how they get Bitcoin access, is the convertibility of the debt into equity, which the equity is buying Bitcoin on the balance sheet.
If you just want to explain like the term there, convertibility, what option does the holder have?
So this is real simple. So like, let's say I'm going to do a 5-year note for $1 billion. I issue that into the market, and let's say I'm doing it at 1%. So over those 5 years, every year I got to pay out 1%, and 1% of $1 billion is what is that? 10 million, right? Yeah, 10 million. Okay, so every year I'd pay $10 million to the holder of that for 5 years, and then at the end of the 5 years, I've got to pay the $1 billion back. That's a traditional bond. A convertible bond is at the end of the 5 years, you have the option to convert your bond into equity as opposed to get your $1 billion back. Okay. So if the equity, the amount of shares and the strike price that you can do it at is more valuable than $1 billion, a lot of fixed income holders will say, yeah, I just want to convert it into equity. I don't want the $1 billion. You can keep that. I just want the common stock, which is more valuable than the $1 billion that was originally issued. And that's all it is. And so what you're finding is you have MicroStrategy, you have, I think Mara went out onto the market. They tried to raise like, these are ballparks, 750 million, 800 million in a convertible debt deal that had a 0% interest rate. So instead of
offering 0%,
yeah. So instead of paying the $10 million every year to the holder of the note, they're literally paying them zero, which tells you how desirable it is because they're getting access to Bitcoin. Okay. So, and then it was oversubscribed, just like Michael's last one that he did was oversubscribed by $1 billion. So my comment as soon as that came out was, well, it seems like his strike on the convertibility was too low, right? Because it was already a 0%. So if it's 0%, I'm paying no interest, which is why he can keep doing this. If he's never paying any interest, like he's making a bet that they're going to convert into common stock and he doesn't have to pay back the $1 billion. And if for whatever reason the common stock would be below because Bitcoin, blew up or whatever, well, then he has to come up with the $1 billion and pay it back, right? But the fact that this is 5 years in duration, let's talk about a 4-year Bitcoin cycle. And this is obviously past performance, which isn't tell you that that's what's going to happen in the future. But past performance is you've never had a compound annual growth rate of anything under 25, 26% annualized over any 4-year period. So if you're issuing this into the market and it's 5 years of duration, do you think he's going to have to come up with the $1 billion to pay back on a $1 billion fixed income convertible note? Probably not. They're going to all convert. Where they wouldn't convert is if the convertibility strike was too high, right? So like part of the deal is like, let's say that the stock is $100, okay, and he says you can convert at $120, or I can pay you back the $1 billion. If he puts that 120 strike way too high, let's say you put it at $500 or something like that, and the stock was at $400, that would be, and this math is really, I'm just like throwing numbers out here to try to make it easy for people to understand. Let's say that was like $800 million if they would have converted it at that strike. They're not going to do that. They're going to take the $1 billion instead of exercising the convertibility. So my comment when he was oversubscribed by $1 billion was that he probably could have raised the strike even higher, right? So there's some really interesting things with the math. And so like all of this is you're basically going to this market, this fixed income market that is has never seen anything like this before. that everybody's starting to really kind of understand the power of, and they're mining this because it's been so overpriced and so overbid, and yields have been compressed down to nothing, that they're stepping into the market and they're saying, well, I can just issue a bunch of this and I can buy a bunch of that at no interest, and I can create enormous amounts of shareholder equity. And if for the convertible debt holders, for somebody with a fixed income mandate, these are the best performing bonds on the planet, right? MicroStrategies over the last 4 years, those are the best performing fixed income instruments on the planet. So not only is he benefiting, but the people buying the debt are benefiting tremendously because they're participating in this. And I think that's what's lost on a whole lot of people right now, is they're like, well, who's he screwing? And it's like, well,
it's win-win-win.
He's screwing everybody who's refusing to participate in this network. That's who he's screwing.
So I think one last important point that people might have a question over here is, come that time of convertibility, does he do a stock split? Does he just issue more shares? What are the
now think about this. So like the reason he can go out and buy another like this Monday, he went out and bought another $1.5 billion. So he just issues more shares into the market. He raises a bunch of cash. He takes the cash. He goes and buys Bitcoin. He sticks it on the balance sheet. So think about this.
So here's the thing that like you'd see on Twitter, people would say, oh, well, he's diluting the shareholders.
He is. But as a shareholder, I'm happy with that, because the compound annual growth rate that I'm expecting out of the Bitcoin exceeds that of what he can do with his company making, call it 100 million a year. Okay. So, and this is the important part, the shares are currently priced 2 to 3 times the treasury value. So let's just use really simple numbers. If the treasury value is 100, okay, and his common stock is being sold for 200 a share, okay, it's 100 per share, $100 worth of Bitcoin, and his common stock is worth $200 a share, he can effectively issue just one share. He raises $200, and then he goes and buys, let's say the price of Bitcoin's, 100. He can go buy 2 Bitcoin for the cash he just raised. So effectively, if Bitcoin's, call it 100,000, he's buying it for 50,000, because his common stock is trading at twice the value of the underlying treasury value. So why wouldn't he do that all day long? Right? As a shareholder, like, I'm thrilled that he's doing this. He should be doing this as aggressively as he possibly can, as long as there's a 2x or a 3x premium on his common stock. So, the other thing that I'd say is because of the way that fast money works on Wall Street, and he's going out and doing these convertible debt deals, and what they have to do is they have to position themselves through the derivatives markets, and what you do is you create this enormous, tremendous amount of volume of trade on the common stock because of the convertible debt deals. Okay, so if you're going to have to sell a whole bunch of common stock to raise cash and buy Bitcoin, the convertible debt deals are actually advantageous to that, because they're providing really, really deep liquidity into the common stock market for him to sell more of his common stock and issuance to raise cash and buy Bitcoin.
Which is even crazier now because NASDAQ 100.
Absolutely. So now you have the NASDAQ 100. So if the general equity markets are bidding, this is just more accretive to his ability to sell more common stock into the market, because it's bidding up. He can sell more into it and just convert it into more Bitcoin. Okay. So what you have is a race, and you have a couple very early, you go out and I volunteered with my son for a marathon this past week. We were there handing out water and stuff. And you know what? It's amazing to watch the difference between the elite, the ones that are pretty dang good, in the middle of the pack, right? The elite, there was like 5 of them, right? And then there was nobody for minutes. And then all of a sudden you started having, like, the better runners were showing up. And then you just had, like, the crowd. And I mean, it was just like cattle, right? And There's and the other neat thing is those elite runners, they just blew right past us. Like they didn't even see us like handing out waters. Like, I don't need your freaking water. Like, I'm gonna be done with this race in like minutes from now, right? And I would say that what we're seeing right now is we're watching the elite runners. They're just gobbling up as much of this stuff as they possibly can because they've totally figured out what the hell's happening. And they know that this is the new global settlement layer. They know the fixed income market is totally effed in fiat terms. And they're doing everything they can to put as much of this on it as they can. And I think that the professional runners are starting to show up, some of them. And I think this year is going to be demonstrative, freaking demonstrative as to the pros kind of showing up to the table, because I think they're going to truly start figuring it all out. And hang on.
Well, 2025, we get the gasoline poured on the fire.
Yeah.
We have the FASB new accounting rules. Well, I mean, what is MicroStrategy's first quarter going to look like? Like their earnings. So if we look at, I look at his last, so Saylor here, MicroStrategy has acquired 15,350 Bitcoin for $1.5 billion at 100,386 per Bitcoin. So so as of December 15th, we hodl, nice one, Mike, 439,000 Bitcoin acquired for $27.1 billion at an average price of 61,725, which they've never been able to account a profit for in any of their earnings statements.
Well, so you got to be real careful on the accounting terminology here. Okay.
Okay.
So like when you say the word profit is a realized thing that is an income statement thing. And this is an unrealized gain. Okay. So this is a balance sheet item that will be listed. I haven't studied the gap accounting as to like, but this is how it should be treated. I'm pretty sure this is probably how it will be treated. It's an unrealized gain, which means it's something that you list in the equity column of the balance sheet. Okay. He lists how many Bitcoin he bought it, right? As an asset. He lists the basis, and then that goes over on, I would treat this as a current asset because you could sell it within 12 months and it's very liquid. Maybe a marketable security current asset on the balance sheet, but you'd list the principal that you paid, and then any delta between what the current spot price is and what he paid would be listed as an unrealized gain on the equity line of the balance sheet. Okay. None of that is flowing over to the income statement at all. So what you would see, what I would expect that you would see on the MicroStrategy income statement would be the $75 million or $100 million of annualized profit, somewhere in that ballpark. Okay. You won't see any of this Bitcoin stuff hit the income statement. And so that's been the issue all along, is like the treatment has been, well, if you have an unrealized loss, you have to list that on the income statement as if it was a profit loss thing, when it's totally not. You didn't sell nothing. So that's the treatment. That's how it's changed. And I guess inclusion in the S&P 500 is going to be, I mean, think about this. Who's going to want to own SPY versus QQQ if there's no companies in there because of the tax treatment and they've got to wait a year? I think this is like, if you're running SPY or any other S&P 500 index, you should be lobbying and fighting like hell to get the MicroStrategy and any other Bitcoin company because of the gap accounting treatment added. Because I think, passive investors, and I'm sure they're not following any of this, but passive, like if I had to buy one of the two, you better darn well believe I'd be in QQQ and not S&P 500. And I'm not in either.
It's going to be an incredible year.
I'm proudly not in either.
Yeah, it's going to be. And again, I tweeted the other day, I want to know who is making the MSFT tracker the day they said no to putting Bitcoin on the balance sheet. So let's have the comparison rolling, because in 4 years' time, that is just going to be absolutely.
Dude, it wasn't just that. It was also that he was replacing Moderna, the pharmacy, into the QQQ.
Oh, so is that right?
It was that, and the fact that he was included into the NASDAQ on the same day that Microsoft decided to not put it on the I mean, it was really ironic. And then you had Satoshi Nakamoto that now is exceeding the net worth of Bill Gates. Like all of these things kind of happening literally like all in the same week, to me is like, this is a freaking simulation, dude.
Goosebumps. So that was the whole Microsoft thing. Goodness me. Like the hubris of those guys is just unbelievable. Like, right, okay, let's ask this CEO, chairman, owner of this company, of a competitor of 35 years. Let's have him teach us about Bitcoin. Let's invite him, but he's got 3 minutes to do it in.
Yeah.
I mean, Mike could have just said, yeah, GFY guys. Like, really, I've got better things to do with my time.
This is what I loved about what Mike did. So he had 3 minutes. He just took literally, it's almost like, you know, how these AI models just take like all the information in the world and they compress it. And then in order to get an answer out, you have to decompress what's in these small files. And I'm saying small, and they are, relatively speaking, for how much is compressed in there. Mike just took everything he knew. He just compressed it into 3 minutes. And like everything was just like surefire, like arrows, flaming arrows straight to the heart. And it was like, either you can decompress this with about 100 hours worth of work to fully understand how profound what is compressed into these 3 minutes, or you don't have to, but it requires energy to decompress it. And he sure gave them the compressed file, and we'll see if anybody, pays attention. I think there are a lot of people paying attention. Who cares if MicroStrategy or Microsoft doesn't figure it out?
Yeah,
I don't.
I mean, absolutely. And the beautiful thing about that presentation was it was up on Twitter within minutes. So it wasn't just in the walled garden of the Microsoft boardroom. Every pleb got a chance to see that and literally be a fly on the wall in the Microsoft boardroom.
It's the biggest clinic, financial engineering clinic I've ever seen on planet Earth. And it's so amazing that it'd be like going on like you go to like the playground and Michael Jordan's out there just dunking on everybody, right? And people are still watching saying, yeah, I don't know if he's that good or not. Like, I can't really tell. That's what's happening right now. And it's just like, how can't people see what in the world is happening? Like, this dude is like flying through the air, like just dunking on everybody. And the bystanders just like, they're like, is this good? I can't tell. He's cheating or whatever. I don't know.
All right. So I think we've done MicroStrategy. Don't want to talk too much about Microsoft, but we have to talk about Trump, the election.
Daniel, before we go there, the one thing I do want to say about the minor thing. So
I don't
know how this plays out long term if you have publicly traded miners that can pull so much productivity into time now. So like the Mara deal, I was looking at this, and like this is at least 15 years worth of mining through the mining of the fixed income convertible note that they did. They've basically pulled their production forward by like 15 years plus, right? I did some math around it. It was like in excess of 15 years worth of production that they pulled into today, right now, because of how they did this. And so if you start a race, which now I saw Riot is doing the same thing. Now, I found it interesting that they paid 75 bips for their deal versus Mara 0, which I think speaks to the health of them. Yeah, it probably speaks to the health of the company. But regardless, if you're pulling all this production forward, you have to start asking yourself, if you're not publicly traded and don't have access to these public fixed income convertible debt markets, are you a dead man walking like 4 to 8 years from now? And that gets really interesting, right? Because especially when you start looking at the institutional ownership of a lot of these miners, it starts going into Wall Street hands if they're going to be the dominant players. And I think that there's a whole lot for people to think about. And I think there's a whole lot for people to talk about with respect to this. And I haven't even I don't feel like I've invested enough time myself to critically think about all the implications. But a couple that I just threw out are my concern areas, and maybe the areas that I think people need to spend a bunch of time thinking about.
Well, the first thing I'm picking up on is you obviously have strong concerns about the centralization of mining.
Well, I don't know that. I think that I've covered this on the show. the centralization of the pools, I think, is maybe even a bigger concern, and the block templates, which Ocean, I think, is, obviously doing a great job kind of, ringing that bell. On the mining front, I guess I'm just more concerned as to institutions being able to, if you got a couple really too big to fail banks, like really kind of controlling the boards of these companies, or really kind of, then I think it could be concerning. But I think we're really, really, really far off from that. But it's something to think about. I think it's a critical thinking exercise that needs to probably be done by quite a few people.
Will we see, just on this topic again, do you think more of like the private miners going public to get in this race?
If I was a private miner, I'd be concerned about this. Just from a competition standpoint. Because think of it, if you can pull 16 years worth of mining forward to now, the price really runs, and you're retaining all of this in Bitcoin. And let's say the price runs to $500,000 or whatever. You kind of have a really massive advantage over people who weren't able to do such a thing. And so then do they action that, or do they continue to just double down and mine the fixed income market, as opposed to, they're still mining Bitcoin, obviously, but what they're really mining is the fixed income market and how broke it is. And so, like, if you really get ahead on that, it is going to have implications for what they're doing in the physical space too, with the rigs and the real mining of Bitcoin.
So with Mara, for example, is all of that money, all of that capital going to go purely to Bitcoin purchase, or are they going to be looking to grow the footprint of their
My
mining
understanding is they're
operations?
just going out and buying the Bitcoin.
Wow.
That's what I would be doing. I wouldn't be like then selling that and buying. You just buy the rigs from the start if that's what you were trying to do.
There is going to be such a huge demand for rigs. My goodness. That's what I'm thinking as well. And if you're a private miner and you can't get your hands on the rigs, you're out of the game quicker than you could even imagine.
Yeah. Maybe the thing that causes this to slow down is because the fees start to become so valuable on chain. I don't know, but I do know one thing. I think this is a trend that's going to pick up, and I think it's going to be extremely advantageous for publicly traded miners versus private miners.
And here's an interesting thing, like the skill set to be sat in the position to be making these decisions. We're going to need a lot of fiat-based financial market plebs to make the jump from their fiat world into the Bitcoin world. So that's exciting for a lot of people. I'm probably listening, thinking of, how do I get out of my fiat day job? It used to be all software developers and shadowy super coders. They were the kind of jobs, developers. But this is, like, call it in air quotes, the financialization of Bitcoin. And these skills, everyday skills and expertise and professional know-how, they're going to be in big demand.
Yeah. It's interesting to me because in the last cycle, they were borrowing a bunch of money to buy the physical hardware. Now they're just skipping a step and they're borrowing a bunch of money just to go buy the Bitcoin. And here's the thing. So, like, if you're a miner and then it starts trading similar to MicroStrategy, if it starts trading at 3x what they've got in their treasury, like, then why aren't they going out there and just issuing common stock and basically buying the Bitcoin for a third of the price?
I don't like to ask for price predictions, Preston, but I
Yeah.
think, the term "it's going up for Laura" just springs to mind. Going up forever, Laura.
Conservatively, I think we're going to a quarter mil by the end of 2025. I don't have much reservation saying that. I think that that's totally in the cards. And I think anything above that, like clear up to 1 million, just wouldn't surprise me.
And
I don't know.
We'll sidle into the Trump thing now, because call it the Trump pump. He was very quick to pat himself on the back for the rise of Bitcoin. And I loved Croesus was all over this. He's like, it's the don't forget the halving, bro. Like, this was programmed in. But whatever. The guy's a comedian at best. What was it like for you with the run up to that? I have no idea your stance on politics, or I've never heard you really talk about it. So it's just
my stance on politics is really simple. I don't like politics, and I don't like talking about any of these politicians because I think that they just parrot whatever they think is going to get them the most votes, and then that's it. And but I'll say this, right? The last administration for Bitcoin was disastrous, like just disgusting, right? Everything I'm seeing out of this administration seems like it's going to be very pro. The Treasury, the Strategic Reserve, I think is potentially massive as far as sovereign adoption. I think it has the potential to really kind of accelerate the inevitable. Like in my mind, so much of this is inevitable. What isn't inevitable is whether it happens faster or slower. And so when I'm looking at everything that's playing out from a political standpoint, it seems like we're taking the approach that's going to accelerate things as opposed to slow it down. And I would just keep it really kind of that simple.
Were you in Nashville?
I was in Nashville, yes. Yeah.
Did you watch the talk?
I was there.
What are the cliff notes?
If I have to be honest with you, I felt like I was losing brain cells as I was sitting in there listening to it. Kennedy's speech was really good. Like it was straight fire. Like, and I think Kennedy deeply understands it. I've heard Kennedy has a pretty massive Bitcoin position size, like maybe 9 figures position size, and he's close to the obviously he's right there in the mix with this incoming administration. So and again, these are rumors that you hear. I have no idea whether he even owns a Bitcoin. I have no idea, but those are rumors that are passed around, with bourbons.
Wow. So the other hot thing on the lips of Bitcoin Twitter is Bitcoin Reserve in the US.
Yeah. I mean, I think it's going to happen. I think it's going to be an executive order on the first day. I know there's a clip of Jack Mallers going around saying it. I've heard that same rumor. And yeah, I think it's going to happen. I think he's going to do an executive order. You have Senator Cynthia Lummis out there. She's already proposed the bill. The question is like how much they're going to try to buy. The number I keep hearing is 1 million Bitcoin. So I think the bigger implication isn't them buying 1 million. I think it's all the other countries that they attract in the process. From what I've heard, another rumor mill, sitting around and at the bar at night kind of talk, is that there's a lot of countries that are already working on this and that they're waiting for the U.S. to make the announcement a little bit as their cover. And so like when the U.S. comes out and actually says that they're going to do it, that you might have 3 or 4 more that come out almost on the same day to say that, yeah, they're doing it and they have been doing
it. Holy moon juice, Batman.
Yeah. So who knows? Again, these are all rumors. This is like, I'm a very simple person that lives a very simple life. And I just enjoy being with my family. And these are rumors that I hear when I go around speaking at whatever. But who knows, like the validity of any of it? I have no clue.
And here's the thing, Preston. Can you believe we're here? Because I started this podcast in 2020. And thank you for your work, everything that you did prior to that. I learned a great deal from you, from TIP, not just about like normal markets, but then following your Bitcoin journey as well. And watching you go full laser-eyed maxi was a thing of beauty. I remember talking to, was it you or I think it might have been Andy or even Jesse on a show in 2020. It's like, right, we were just spitballing. Who's going to be the first to announce? Like which company?
Yeah.
Like that was the fun thing to do, right? In like early 2020, when we were all locked down, we had nothing to do. It's like, guys, one day somebody's going to figure this out. And then bam, Mike just announces in September that they'd bought. It was crazy. Like we were all high-fiving each other, chest bumping on Bitcoin Twitter. Look at today. Like,
yeah, I'll be honest with you. When I was always asked that question, I always said it was going to be the ones that are going to do it first are the ones that have been victimized by the dollar the most. They're going to be the ones that step into it first. And the ones that most likely will be last are going to be the ones that benefited the most. So, based on that, I would have suspected that the US would have been really late. But another caveat that I would always put on that answer is, it comes down to leadership, right? Like, as a former military leader, you can have just amazing leaders with just incredible foresight that can lead this body or this organization in a way that's just that you never thought would be possible, or even, it's just kind of miraculous what some leaders can do. So you get the right leader into a country that can see something, that can actually listen to the why and can actually understand the problem. You can get results that you're not expecting. And that's not my way of saying that I think that any politician is a great leader or not. I'm just saying that I think, it comes down to individuals sometimes that are in charge that can change the trajectory of what a generalization of like what will play out, because you're predicting the future, right? Or at least you're trying to predict what you think is the most likely outcome. And what I would say is individuals can influence things, especially if they're in strategic and influential positions. They can change the course of history. So, I think we're in for 2025, in my opinion. It's just going to be freaking crazy, man.
so again, the pushback you'd see on Bitcoin Twitter would be, okay, great. They start stacking Bitcoin on the balance sheet in the United States, on the government's balance sheet. Is this not just going to become paper Bitcoin in the end? And we'll just end up doing the same thing that we've always done before, fractionally reserving paper promissory notes against the Bitcoin holdings.
Yeah. I mean, this is always the concern that you see because of what happened with gold, and Bitcoin's not gold. If you tell me you have one Bitcoin and that you'll pay me that Bitcoin, we can settle that right now on this video call, and I can prove real fast whether you got it or not. Or, with gold, that's just not how it works. You could hold the gold bar up, you could dangle it on the screen, and I could see it's real, but that doesn't mean that I'm going to receive it and that I'm going to actually get it. And so we all know what makes Bitcoin very different than gold. It is inevitable that if this thing goes all the way, sovereigns are going to have to own it. Okay. So I guess what I would say back to the person who's throwing that up there is, what can you do about it? And the answer is, you can't do anything about this, that sovereigns want to own it. Go back to a really core thing. Bitcoin is for your enemies. Okay. Bitcoin is for everybody, whether you like them or not, whether you like how they're using it or not. It's for everybody. And can people that are, let's just say, the ETFs, right? I cannot prove that all those Bitcoin are being custodied by Coinbase for all those ETFs. They could be totally ripping everybody off. Okay. But where I am confident is, with time, that can be exposed. Whereas with gold, I don't think it can be, ever. So that's where I hang my hat, is you might be able to manipulate the system by papering over it or whatever in the short term, but I think in the long term, it will always wash itself out, because there's always going to be some whale that look at Saylor. Like, if you don't think that dude's calling everybody's bluff right now by what he's doing in Mara and Riot and all the others, like.
So the other question would be, where are they going to get the cash to buy it? So one way would be from federal income tax, and the other way would be to sell bonds to the Federal Reserve and use the Federal Reserve money to buy.
Yeah.
So that could be sticky, because the Federal Reserve might see that coming and they'll be like, no, we will not enter into that deal if you're going to use these funds to buy Bitcoin. Could you see that?
The concern for me in the long term isn't how they're going to be able to receive Bitcoin. Because at the end of the day, the government's just a parasite that sucks the energy out of its host. Okay, period. So they're going to find a way to tax it or whatever, and they're going to receive Bitcoin that way. The concern is that as we're converting and changing over to this new monetary system, there's going to be such a massive stopgap between what they're accustomed to being able to spend and the psychological conditioning of society and politicians alike as to what is normal for what the government spends their money on, to like, oh, we're now using immutable, like, sound money, and we can't just print, $100 billion and send it to the Ukraine or whatever the number is, right? All of a sudden, the populace is going to figure this out, and they're going to be very disgruntled, but they're still going to want the handouts and the flow of the free energy that was coming out of fiat to the select few. And so that stopgap of like the transition is the concern. And so, like, where are they going to get the Bitcoin during that period of time to fill the massive void that exists between what they're used to and where this is going next? And that's my concern with the ETFs, if I have to be quite honest with you, because I think that, with the stroke of a pen, all of a sudden it can be mandated that 25% of the coins being custodied by the ETFs are now going into the sovereign treasury. And if you were a holder of that, congratulations, Bitcoin's up 25%. So you didn't really lose anything. It's just flat. It's kind of like the gymnastics that are going to be tried. And the thing is, not your keys, not your coins. And if so, be ready for whatever shenanigans the government's going to try to pull with the stroke of a pen, because people don't want to go to jail. People don't want to go to jail if you're the custodian of this and you're at Coinbase and you're Brian Armstrong and you're out there selling like a million shit coins and doing your thing, right? He doesn't want to go to jail. And so if he gets some type of mandate that says, hey, you got to give us 25% of these coins, like, he's going to do it because he doesn't want to go to jail. So it's just something, it's a risk. Doesn't mean it will happen. It could happen. That's important. I'm not saying that's what is going to happen. I'm looking at, it's real simple. I'm saying this transition is going to cause massive issues with respect to how much they have to spend versus what the populace and politicians are used to spending. So if true, if you agree with that, how are they going to fill that void? And then the question is they've got to find a honey pot of some source that's liquid. Okay. And when I look around, I see a couple of them. Right.
Yep.
And so
there's some low hanging fruit out there. and MicroStrategy is one of them.
MicroStrategy is one of them. So the question is if true, which honey pot are they going to try to rob, and how will they rob it? And what will be the story that's told to rob it? And here's another key consideration. Who is impacted? So if, let's say I got to steal a million Bitcoin. Okay. If I steal the million Bitcoin from this entity versus that entity, how many voting citizens are in this one versus that one? Okay. Because I'm probably going to go after the one with less voting citizens. This stuff's simple. I'm not predicting anything. I'm just looking at the incentives. And I'm saying, if this happens, then that'll happen. And then this will probably happen.
And it's interesting what you said about apparently there being a few other countries waiting for the US, because not only are they waiting, they're going to wait to see how they do it as well. And then the game theory kicks in. It's like, oh, right, yeah, they just robbed the biggest exchanges and the publicly listed companies. We won't do that. And we will
I think that comes way later. Yeah, I think that comes way later. I think that comes, I mean, truly, Daniel, that's the oh shit moment. That's the moment when where nobody wants to even accept your dollars. And you're looking at all the expenses that you have lined up for the coming year. And you're saying, okay, if I print even, the amount of printing that's going to be required at this point is going to be so absurd. And they're looking at it and saying, well, nobody's even going to take this stuff. So we have to get something that people will accept. So where do we go, and what pen stroke can we do to achieve the ends to our means of acquiring it? I mean, it's very dystopian. It's a very dark lens. Hopefully, that's not how it goes down. But again, I'm not telling you what I think is going to happen. I'm laying out the array of potential outcomes so that people can make their own risk-based decisions and position themselves appropriately based off of these known risks. That's all it is.
What Preston is trying to tell you, plebs, is just self-custody your Bitcoin. Get it off of the exchange, get it off of any app that you've used, get it onto a Bitbox or anything equivalent, whatever is easiest for you to get your hands on. Buy straight from that company. Don't go through a third-party salesman, or go meet the company at a conference or something, but just get your keys. That is, and then sit back and enjoy the fireworks. It really doesn't matter what happens after that, because if it's on an exchange, here's the thing as well, that this game gets played in financial markets, and look, Wall Street's here now. Whether you like it or not, it's here. It's happened. End of fucking story. Stop moaning about it. It's not going to change. But now they will have the ability, especially with the options on the ETFs built in now. There's going to be a lot of monkeying around, especially if we're coming towards a particular expiry date with a particular strike price. Spot markets will be manipulated heavily to try and get that price to the strike or keep it away from the strike.
No doubt.
And plebs are going to sit back and watch this whipsaw, and you will get shaken out if it goes up too quickly, because you'll get, oh my God, I've got too much of my net worth in I've got to sell some. And the same will happen if it whipsaws to the downside. So please just sit on your fucking hands. Like that's Preston and I have been doing this for a long time. Please just sit on your hands, sleep well, enjoy your family life, and eat well and be happy.
Yeah. The beautiful thing about custodying your own keys is you can act like a whale even though you're a minnow, right? Like you could have a really small net worth, and it's all denominated in self-custody Bitcoin, and you hold the keys, and like you can't be shaken out of that. And a lot of the times when you give up control of something, you also give up the ability to sell it or buy it whenever you absolutely need to, which is then used against you to shake you out of positions and a whole bunch of other things. So, yeah, and getting into the timing of when things are, just I would keep it that simple. But yeah, what a time to be alive! What a time to have access to. Everybody has access to this technology to tap into this if they want to. Like, when does that ever happen?
It's crazy. Now, lending markets. Should the plebs be looking at? Well, I remember we did a show about this back in 21 or 22 when this was becoming a thing. Obviously, the BlockFi thing blew up. That was very obvious for those paying attention from the very beginning that was going to be nothing that you wanted to be touching. Then Celsius. We still have Ledden around. We have Debify, which is brought to you by Hodl Hodl. Am I missing any there?
Those are the two big ones. Those are the two big ones, yeah.
And then we had Lotnik announce that BGC partners are going to be doing some kind of lending, loaning, collateralized.
I love talking about borrowing and lending. And Max Kai from Hodl Hodl and now Debify. In my opinion, here's a guy that's been around for 5 years, 6 years plus. He's been through multiple 80% moves to the downside, and everybody's always come out alive, and the users haven't been ripped off. So that you have to ask yourself, well, what is he doing that's different than everybody else? He is forcing it to be peer-to-peer and over collateralized no matter what, 24/7. And then the frequency of the spot is also vital, which, I think I don't know, but I think his frequency is every block that they're checking the spot price. They're like 10-minute intervals or whatever. So if you're doing this, in my opinion, that's responsible borrowing and lending, because you're not creating a tranche where some people are over collateralized, other people aren't, and you're sticking that into some type of escrow. And then all of a sudden, this person over here that wasn't over collateralized, they actually have another counterparty that caused them to blow up, and now they need to blow this up, and then it just cascades. This is fractional reserve banking. This is under collateralized fractional reserve banking. And especially, it really gets interesting when it's a very illiquid market like housing and things like that. Okay. Bitcoin is the opposite of all these things. And so if you do it in a responsible way, it's highly liquid, right? Extremely, the most liquid thing on the planet right now, practically. Maybe is. It's a 24/7 market. So even if the price moves outside of like your collateral, like it's trading 24/7, you can still liquidate it. Okay. The frequency is just nonstop that you can check that spot price. And your counterpart, you and I go into an agreement. You want to borrow $100,000 from me. I give you the 100,000. You post 150,000 worth of Bitcoin in some type of escrow that'll immediately liquidate if the price starts to drop. Like, I'm sorry, that's pretty safe, right? That setup is very safe because it's peer to peer. So my concern moving forward is you're going to have banks that are very accustomed to fractional reserve, very illiquid markets, checking the spot price on weekdays from 9 to 5 kind of mindset. They're going to bring this crusty mothball approach to Bitcoin, and they're literally going to get their heads cut off.
Mm-hmm.
So
imagine a long weekend, and there's a huge drawdown over the price of Bitcoin over that 3-day period. What's going to happen Tuesday morning, 9 a.m.?
Yeah.
Like, boom, liquidated.
Yeah. So I would encourage people, if you really, especially if you're in traditional finance and you're in borrowing and lending, if you don't know who Max Kai is with Debify, I would highly encourage you to find out who he is on Twitter, follow everything that the guy's done for the last half a decade and how he's been able to run a borrowing and lending platform for that entire time without any type of issues, because that's how he was doing it.
All right. Definitely worth checking out for the plebs if that's a service they need. And there will be a few, because if you're 100% or even 90% in Bitcoin, you still need fiat every day. The services just aren't in place yet. There are some out there where you can get like the cards, Bitrefill, for example, Zappo. I'm not sure if they're global. It depends where you are in the world, wherever you're listening. Anyway, I wanted to talk to you.
One other point on that last one. People will look at the yields in these markets, and it's like 15% annualized to borrow the dollars, and you're over collateralized with your Bitcoin. You don't have to sell your Bitcoin, right? So why is the yield so high? Why is it 15% when the rest of like traditional finance is 7% to go buy a house or whatever it is right now? The reason why is the person who's going to lend you, let's say you want to borrow $100,000. The person who's going to lend you $100,000 obviously understands Bitcoin, or else they wouldn't be participating on an exchange accepting that as its collateral. Okay. If the person actually understands Bitcoin, they're expecting at least a 25% return annualized, as opposed to the 10 or 15% that you're going to get on the fiat, that they would get on the fiat for lending it. So their opportunity cost, the lender's opportunity cost, is Bitcoin. And the lender understands this. And the lender would just rather own Bitcoin, just like you, who's trying to post it as collateral to borrow against. So that's why the yields are so high. So I think this is going to get interesting is when traditional finance people that are networked into these super low, in my opinion, out of reality rates, call it 6 or 7% for a house. Like, people are like, oh, it's so high. It used to be 2 or 3%. Yeah. Right. But the world's changing like really fast. And when these people that are networked into these legacy rates finally figure out what in the world's happening, I'm curious if it's going to start bringing some of that down. Another idea that I think is really fascinating on the borrowing and lending piece is like, look at Tether. So they're basically just mining sovereign debt is what they're doing. They're just going out there, they're tokenizing, they're making sovereign debt saleable to every person in the world. And as a result, they basically get the coupon for free, because the person who's using the token just wants it for the saleability attributes and not the coupon that's associated with it. So they're basically making 5% off of everything that they tokenize on sovereign debt. If you would take that, combine it with borrowing and lending, now all of a sudden, if they were trying to achieve a network effect on the borrowing and lending side, they could maybe kick back 4% of the 5%, or maybe even all of it, to try to build like an enormous amount of demand. So like, let's say that the going rates are 10%. And then you can kick back 4% of that, and now you're at 6%. Now you're competing with traditional borrowing and lending. Now the entity that would be doing this would be only making 1% off of, and you'd also have to have your own stable coin. So like, I guess when I'm looking at like, where does this go in the future? I would be shocked if Tether or any of the other large stables don't start getting themselves into these types of borrowing and lending platforms, because I think when they're additive, you really start to compete with legacy borrowing and lending in a way that a lot of Bitcoiners would be more than happy to lock up coins to borrow in. Another interesting thing, sorry to keep going on here, if borrowing and lending starts to become way more desirable for Bitcoiners, think about the liquidity of Bitcoin in that scenario. I'm going to lock up coins for 10 years and they're never going to go back on the market because they're literally sitting in escrow because I wanted to go buy a fancy house or something. Like, what does that do to the price?
I had thought about that. A friend of mine brought that up to me. He's like, wait a minute, if we all just start placing this as collateral, locked up 4, 5, 6 years, that's even less Bitcoin going back on the exchange. Right. Where the hell are these? I mean, honestly, does the math even add up to you? How are these ETFs buying all of that? Where is it coming from?
That's the other thing, all these ETFs. So then you're going to start getting products that are like, hey, we've got 500,000 Bitcoin here that don't give you any type of dividend. Would you, we'll go over here and do borrowing and lending things with them. Imagine Debify, right? Who's doing this in an appropriate and reasonable and, smart manner where there's peer-to-peer, it's over collateralized, yada, 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 all the stuff I said earlier. But they're going to do this on behalf of an ETF that's custodying 100,000 coins or something like that. And then they kick back some of the yield to the ETF holder. I'm just throwing out things that the math to me is where a lot of this, people would be like, this sounds like a disaster. I don't care what it sounds like. I'm telling you what human beings are going to try to do with this, just through the natural incentives and the math. Okay. So you can be upset. You can say, oh, stop saying this. Just go in the corner and cry and deal with reality. It might rain tomorrow for you. Are you going to cry about that too? Right? That's how I see this. This is just natural. This is nature working itself out and experimenting, and something bad's going to happen. Something good's going to happen. Like, deal with it. Stop crying.
There are going to be some spectacular blowups. That's for sure.
Yeah,
for sure. And to your point earlier about Coinbase, I just can't. Yeah, it makes no sense that company. The amount of shit coins. I mean, Brian, he was tweeting something about Bitcoin, this, that, and the other thing about, really bullish about Bitcoin. And the truth of that is he knows it. Like, he knows. But yet on that exchange, you can't count the amount of shit coins, and you can't, like, the incentive structure is all built around trapping your customer into trading in and out so you can get the commission, and pushing notifications to them to make them addicted to their app, and all of this bad fiat stuff.
Degenerate stuff. But you know what? Hey, that's what makes a market. Let Brian go do his thing. And if it results in his demise, so be it. Right? Here's another thing that is a frustration point for me. I firmly believe in free and open markets. Right? And if Brian wants to go out there and rug pull people and do all these degenerate things, you know what? I think that he should be allowed to do those things. And I think that what it's going to do is it's going to violently shake people to wake the hell up and stop being so stupid. Okay? This Hawk 2 coin and this girl.
Okay? God.
If you bought that and she stole $10,000 for you, congratulations, you're an idiot. Okay? I don't feel bad for you. I think you're an idiot. And the fact that you have less buying power in this world moving forward, I think is a good thing, because I think you're a moron. And I think that morons should be penalized. I don't think that they should have benefits. If you're stupid and you don't work and you don't put in the real effort to be better and to progress society, well, I don't care that you don't have a lot. I just don't.
Harsh words, Preston, but very
It
true.
is harsh. It's this
Well,
thing
that's what
called
that's what the free market is.
it's called personal responsibility.
There you go.
So if I go outside and I trip and fall, do I blame the sidewalk or do I blame myself for not, walking? Right? Like I missed it. I messed up. Like I go out on the golf course, which I never do because I can't stand the game. But I hit a bad shot and I hook it into the woods. Is it the woods' fault? Is it my golf club's fault? No, it's because my swing is total trash. Right? So like take responsibility for yourself. It's that simple.
All right, we got to touch on ego death. What's going on?
Yeah. Yeah. No, I mean,
When did you start that position?
So we started Ego Death probably 2.5, 3 years ago, I would say. We have the first fund, which is primarily focused on startups, early stage seed. And then we have a second fund that is primarily doing Series A's. And this is all only in Bitcoin, Bitcoin companies, and a little bit of seeds in the second fund as well. So if people are listening and you've created a company and you're looking for funding and you got a great idea, you think you got some type of long-term, moat and capability, hit us up. We would love to take a look at it and talk to you. And then if there's any, limited partners that are looking to move the ecosystem forward and, the most common, this is interesting. The most common question we get when we're talking to potential investors, which I love this question, is why in the world would I invest in this versus just owning Bitcoin? And it's the most fair question anybody could ever ask. And, the response that I give them is just because we're investing in this space, we are, our hurdle rate is Bitcoin. Like if we're trying to invest in a company and we don't think that that company can grow faster than Bitcoin, and we don't think that that founder will retain their earnings in Bitcoin and do all those types of things, like it's just an easy no. Like because we ourselves want to keep our money in Bitcoin if it can't exceed that hurdle rate. And for me, when you look across the spectrum of things you can invest in my humble opinion, like one of the only things you can invest in that can actually outperform Bitcoin is it's twofold. First of all, it has to be in an industry that's just ripe for disruption, right? And so finance is ripe for, in my opinion, is ripe for disruption. I would also say like AI is, like everything that it's going to touch is ripe for disruption. You can buy equity for $10 million, it'll go to $1 billion. So that return profile, you have to be in something that is very large industry wise and that it's going to be completely dematerialized. And so like I look at Wall Street, I look at finance and I say, okay, check. The next thing is you have to invest in something that's very early stage or, has tons of growth prospect that's there. And when I look at a lot of these companies and the size of the companies that we're investing in, they're very early stage. They're, some of them are pre-revenue to some, the revenue is $1 million to $3 million right now. And we think that it has the potential to go to $500 million plus. So if you're looking at just the math, that's pretty much the only way you can outperform a Bitcoin hurdle rate. And then I think there's a little bit of a kicker that they're Bitcoin companies. So like all these founders come predisposed with this idea.
Who would you give it to?
I know that sounds terrible.
I remember your first response. You've answered this question 3 times already, I think. Do you remember your first one?
I remember my first one. I'm not proud of it.
Go on. Who was it?
I think it was Ray, right?
It was Ray Dalio. You're right.
Yeah.
And you didn't skip a beat. I asked you the question and you went Ray Dalio. No, and I was all over you. I was like, yes, that is a great answer because he had been so influential. Do you remember, obviously, but the listeners, he had this like explainer video, like it was hand-drawn, sketched about how the economy works and all of that. And I remember going down the rabbit hole of all of this, just financial markets in general, finding it really, really interesting that the way
I'll say this is why he gave me, this is why I said him, is because I didn't understand long-term credit cycles. I didn't understand the debt markets and how it had basically, that we were in this big, giant long-term credit cycle until I discovered Ray and studied Ray. And so I would have never been a Bitcoiner if it wasn't for Ray through studying his material. And so I guess at that time, I was kind of like, oh yeah, I really wish this guy would get it, because I would have never been a Bitcoiner if it wasn't for him. And it's interesting because I saw he's out in the past week saying, definitely don't own bonds, and you need to have gold or Bitcoin in your portfolio. But it doesn't seem like he really actually understands Bitcoin that well. He understands the case for why Bitcoin would do well, but like actually understanding Bitcoin, I haven't seen anything that's impressed me. At this point, Bitcoin, I think, is truly taking on a life of its own. I don't think it matters whether this billionaire or this company or this country understands it or not. I think that they're going to be forced to figure it out and understand it. And in a way, I kind of view the natural filtering to maybe be really beneficial to society, because what you're getting are the Hawk 2 people are getting minimized and pushed to the side, and they have no control or influence on society moving forward, because they're just going bankrupt and losing all their money and all their influence through the lack of funds. And the people who are deep intellectual thinkers and good quality human beings are the ones that are figuring this out. And they're very positive, and like, I don't know, I could go on and on about what I think about the Bitcoin, like true Bitcoiners. And I find it very refreshing that they're the ones that are naturally accumulating the coins. And I think that this is going to benefit society way more than if I could say, oh, I wish this person had it. Like, I'm kind of glad they don't, if they haven't figured it out.
Love it. Mic drop. Preston, how can people find you? What's the best place to come and interact with you?
I am active on, I'll say it the right way, X, Twitter, whatever. Just at Preston Pysh. I have a podcast. It's We Study Billionaires is the feed, and the Bitcoin show comes out every Wednesday. Ego Death Capital. If you go to egodeath.capital, for people that are interested in funding for startups in the Bitcoin ecosystem, we would love to take a look. Or if you're an individual that would like to invest in that, just go to the website and fill out the form. It'll take you 30 seconds.
And you're on Nostr too, so your NPub would be on
Nostr too. I'm on Nostr too. Yeah. That's something we didn't talk about. Was
all right. Let's do it.
And
do the Nostr in a nutshell.
No, I think that just like money being vital for, like, at the base layer for energy exchange, I think that open and free and open communication is vital for establishing contract terms of the exchange of energy. And so when we're talking about the exchange of energy, we're talking about Bitcoin. When we're talking about the free and open communication of the contract terms, we're talking about Nostr. And I think the Nostr protocol is going to continue to grow. I'm super bullish on this. And right now, it looks like it's like a Twitter-like experience if you go onto any type of client that gives you access to Nostr, the Nostr protocol. But I think with time, it's going to evolve into other things that, like, we just really can't even wrap our head around. But I think at the core of it is this idea of open communication and to establish contract terms between entities and individuals, and maybe even, AIs moving forward. Because, I mean, if an AI wants to establish a contract with, some other AI, is it going to want to do it on some type of platform that's controlled by some human that could manipulate the terms and conditions or whatever? Or do they want to do it in some type of redundant node that's backing up exactly what was or wasn't said, and it's signed by encryption? I think it's the latter. So yeah, I would call it the identity layer as well, would probably be maybe another way to look at it. So very, very important. And I'm an advisor on Primal, which is, in my opinion, the best client out there for accessing Nostr, and highly encourage people to try that out. I think they would have their minds blown if they went on, download the Primal app. Just go on to any app store, type in Primal, download it, create an account. Within a minute, you'll have a wallet, a Bitcoin wallet, and just go in there and use it a little bit. I think you'll be blown away at what you find.
Yeah, it's great fun. I'm enjoying it on Nostr, and yeah, I'm a user of Primal as well, and in touch with the guys over there. So yeah, well, thanks for coming on. Thanks for everything that you've done and continue to do for Bitcoin. And yeah, look forward to seeing you again soon.
Likewise, Daniel. Really enjoyed it, bud.